I mean, ironically, the stronger data in China is actually probably bad for the markets because people are worried about the tightening. And today, PBOC took some more money out of the market. But saying that, we're expecting an incredibly strong first quarter, probably up to 20%. We'll get that later. But some of the leading indicators are actually slowing a bit. So we've still got pretty good growth in China, but not as strong as people think. And I think that will start to be more subdued over the next couple of months. But clearly the worry for the equity market is this strong growth is going to going to lead to a policy response. We don't think it will. We just think it will lead to more normalization, and one has to be patient over the next month or two.
And so that might provide a good entry point. I see you also like India and South Korea. What is your reasoning on liking Asia in general? Is it because when you take a look across the pond, you've got, for example, US markets at record highs, the Euro Stocks Index also touched an all-time high overnight. Is it just looking like just got more runway to run?
Yeah, I mean, the main fundamental reason is that we think we've got better growth coming out of the Asian region, and we think that the global economy will recover, and particularly in the second half of the year, and Asia will do incredibly well. Korea is more to do with cyclicals, semiconductors, old economy. China's more to do with the structural story and is cheap, and we've got good earnings growth. And India's been more of a recovery play, although the Indian story could be a bit more subdued over the next couple of months, because the last few weeks we've obviously seen a massive increase in cases in India, which is a bit worrying.
Oh, yes, indeed. And that's a key risk for the economy and the markets there. Sean, good morning. Thank you for rejoining in this conversation. 19% growth in the first quarter. Of course, this is going to be backdated. This is going to be outdated data for the first quarter, and the market is typically forward-looking. But do you think that in the commentary that comes with the data, that perhaps the authorities in China would signal how they are trying to spread out the recovery, make it more even?
Well, I think that's right. I mean, the economy is clearly recovering fast, but it's off a very low base. But I think this year, the rest of the year, the economy will be different. It will be more driven by consumption. It'll be more driven by a pickup in employment. Where last year was more to do with government capex. So we're going to see that transition over the next few months.